is July 19th. It's a Friday morning or Thursday night, 12:15 a.m. And I'm not sitting at an all-time high. I would have been if I hadn't made those uranium calls, bought those uranium calls. But such is life. I am having a really, really good time looking at this silver and gold rally, and I'm going to talk about that. Also, I'm going to give you a pro tip that might most likely will save you a ton of money in losses. All right. So let me show you the account, see what it looks like. We'll do a quick run through. These are the options. The uranium calls are decreasing rapidly, but so are the Apple puts that I bought, the long term, the leaps. They're eroding in value, and that's good for me because I've sold them. So I have EXK here, Endeavor Silver, appreciating $150 only because I've already sold like 400 shares. I know I said I was going to start selling at 250 and it's at 250 now. Let's go into it right now, I guess. It's 249 and I'm supposed to start selling now, but I didn't want to wait until that moment. I wanted to actually get some profits in, and so I'm going to be selling the other 500 shares from now until it reaches $3 or so. If it surpasses $3, it's great. I still have some more XK in a different account. All right, so I'm sitting at 61,354, and we started looking at the account here. 154 XK. Apple appreciate $320. Of course, I have a call sold against that, so my gains look a little bit different. Let's go into it. So now I have $320 appreciation here and a combined $45 appreciation through the option. So all in all, $365 because I have two puts sold against my money. Or I guess it's not my money. I borrowed them from Robinhood, right? So I'm making money off somebody else's money. By the way, which is a very good tip. You should make money off someone else's money. There's risk though, so careful. All right. Now, moving on. Other big movers. Main Street over here appreciating $11. We got NYMT down 17. That's a New York Mortgage Trust. Real estate company. We have Precious Metals. 33 shares left in Wheaton Precious Metals. I have sold 100 shares through a $24 options call that I sold, so I was forced to sell that. But that's okay. I'm collecting profits and gains, and I'm happy with that. I still have 33 shares, which are still appreciating, and I'm thinking of exiting those 33 shares pretty soon, since this silver spike might be coming to a temporary exhaustion. So I'll be selling these 33 shares if there's a pop tomorrow. It looks like it's losing 0.5% overnight so far. If it appreciates maybe 1% or 2, a low appreciation or stays flat, I'll probably sell the shares. If it goes up big, I may keep them over the weekend and see what the follow through on Monday looks like. But that's as Wheaton Precious Metals. I might also sell some EXK. So gotta collect profits, you know. All right. So anything else? Chemical up $34, and of course the American uranium producers down in the sink again, negative $84 and $18 here. If you want to see the percentages, 4% and like a few percent. That's actually 6% now. And then URG, which is the other American producer, UR Energy, down 4.48. Losers, man. We didn't get that legislation passed, so that's it. That's what we got to deal with. Okay, so pro tip that's going to save you some money. It has to do with trading and investing in mining companies. All right, especially, well, any mining company, especially ones that are not very big. You gotta understand that these mining companies are not a buy and hold kind of strategy. All right, you basically have to trade them. You can trade them over long periods of time, but you can't like buy a company and then a mining company and then expect that investment to yield you returns until you retire. Like that's not the right company for that. The gains and losses in mining companies are spectacular. so they could go up quite a bit and they could fall down quite a bit. One of the reasons why I started trading EXK to begin with, is because of that volatile nature of the company, plus it being solid and a high cost producer. I've talked many times about why high cost producers are more volatile. You can probably find it in some previous videos, and let me show you what I mean by that. Right. So if I go here, EXK, let's go pull out the 5 years. Like, this is not a typical stock. It's not like an Apple or a Microsoft or a Coca-Cola or something like that. Look, it's $66 on August 8th, 2014, and less than a year later, 6 months, it's down to $2 in 6 months, eventually bottoming out at 108. But in 6 months, it went from 6 to 2, right? It cut itself 3 times, right? From 2 to 6 is like 300% increase. So it went the other way in 6 months. And then over here from January 22nd, 2016, all the way to August 12th, 2016. So another 6 months, it appreciated back to almost $6. You see this? I mean, it's crazy ping pong type of action. And then eventually, of course, from this $5.57 level, it goes all the way down to $2, bottoming out at 174 or so in 2009 May. All right, so there's crazy swings. There can be all kinds of supply or squeezes or demand events that happen that push the price dramatically up and down with hundreds of percents. And it's fun to trade, but it is not a long-term investment. As you can see at the end of the chart, we're sitting at 250, and I'm talking about selling, right? Even though it was $6, why wouldn't I wait until it hits $6? Well, it might hit $6. I don't know that for sure, for certain, but what I do know is that I can make money scaling in and out of that stock, like I have been for 10 years, right? So it's not a lot of money. I haven't made a lot of money per trade, but cumulative together, it equals out to quite a bit. All right, so let's see my most recent sells. Let's see here, history. I sold at 219 and at 234, 200 and 200, and now at 250 tomorrow. Hopefully it stays at that level. I'll sell 200 or 300 more shares for more profit, right? So if we go to the history, you'll see that I've bought at 178, 188, right? At 210, I've sold at 216. You see, so these are most recent buys at 210, 188, and 178. And my sales are 219 and 234. So I made profit. Like, if you look at the total amount here, 200 shares selling for $468, 200 shares bought at 178 for $356. So that's over $100 gain just from that one scale. I mean, $200 is not that much, but if you start adding up the money for all the different scales, then you're looking at quite a bit of dough, especially over a large amount of time, like years, doing this over and over again. But anyway, you don't want to, sorry, it's a fly in here. So you don't want to buy and hold mining companies, especially ones that don't give dividends like this. Like, there's just no point. Maybe a streamer like Wheaton Precious Metals, it gives a dividend, and it has a business that can withstand downtrends in commodity prices. But miners can't control their product. I just imagine, let's say you had a company like Apple, but it couldn't control the price of their iPhones. I mean, the stocks would swing super wildly, right? They're not free to find their own little, like, supply and demand threshold intersection. So that's how the miners are. There's so many variables going into the companies, and sometimes they have to issue a ton of stocks, and reverse split and do all that kind of stuff to raise money, to raise cash for new production if the price go up. I mean, it's really complicated, and it's a money draining type of operation, but it is very volatile. So if you want to trade, it's a trader's like dream, right? But if you're a buy and hold investor, don't do it. If even if you believe in the holding metals for a very long time, like gold, then hold gold, right? Don't hold gold mining companies. If we pull out, I'm not gonna do it right here, but if you pull out a really long-term chart of a gold mining company, you'll see that it's below its all-time highs way back in the 80s. All right. Can you tell the same thing about Macintosh computer or Apple, right? Can you tell a lot of companies gone bankrupt, but a lot of the staples that are comprising the Dow Jones, for example, their highs are not at in the 1980s. All right, they haven't been in a sideways slash down market for 40 years, but mining companies have been. All right, so you can't buy and hold that. Don't do it. All right. So, anyways, that's my warning. I updated you on the pricing and what's going on with the account. I'm really happy about the precious metals appreciation. I think there maybe after tomorrow, maybe a follow through and through the weekend, might be some more appreciation. But after that, we're looking. I'm thinking there's going to be an intermediate correction. Who knows for how low? And I might actually scale back into EXK or some other miner. Right? I'm trying to research other mining companies because EXK is not doing as good job as it should be. However, because it's a high cost producer, it's going up higher, as you can see here, 9% overnight, 9.13%, and 4.18% after hours. Sorry, overnight means 4.1%. Well, anyways, together over 13% today, which is quite a bit. I'm not shocked about it, but it's still really underperforming. Like there's some silver miners that are high cost that are performing a lot better. Um, I do want to show you something though. Look at this chart. It is kind of beautiful looking. It's very uniform, the weekly chart. 37% gain for 1 week. Um, and then this is what the monthly chart looks like. It's a very sharp move. This is the 3 month. So if there's some follow through here, it might still happen, and then I'm thinking there's going to be like a sharp correction. I don't know to what level, maybe to 213 or something like that. At which point I might actually buy more. I'm not exactly sure. We'll see how the market moves and what the metal prices do and where they're sitting at that time. I can't make the decision right now. Don't have the information. All right, so I think that's about it. It was fun. I'm happy that I'm almost at an all-time high again. Of course, my all-time high being 61,845. And I'm curious to what's going to happen tomorrow, over the weekend, and Monday, and continue my strategies. Try not to deviate too much and do stupid stuff like buy option calls for uranium. Even though it might pay off, it's like buying a scratchers, going to 7-Eleven and buying scratchers, man, or like a lottery ticket. All right. That's it. Peace out.